Good morning, everybody, again from Dubai. So, have any of you ever done a YouTube video channel thing with yourself as the talking head? How'd you get on? If anybody watches this, I would really like to know, because I always find it really, I don't find it comfortable talking to a camera. I don't know about you. I find it quite uncomfortable. Anyway, that said, here we are, and I'm on a walk again, and I hope you don't mind me doing these series while I'm on a walk, because I don't know, gives me something to do when I'm walking, I suppose. Anyway, so we're on to part number 5, I think, of this series on preparing a cash flow forecast. And today we're going to try and do 2 things in one go, which is labor costs and overhead costs. So we'll see how we get on. Anyway, labor is going to be quite easy. You have a labor force and you pay them at the end of every month, right? So you know what that labor force is, the cost of that labor force is going to be. So you don't have any payment terms when it comes to labor, right? You pay them at the end of the month in which they've worked, and you just factor that in. The only thing that you may think about is overtime or any other additional hours that somebody may work, especially if they're sort of direct labor, so those that are directly responsible or attributable to the production of your goods or your services, I suppose. Back office staff like accounting and procurement, if you have them, or admin or something like that, then they're considered to be indirect labor. So maybe you think about overtime, and what I would do in situations like that, in factoring in an overtime cost to my labor cash flow forecast, would be to look back at what's happened maybe over the last 6 months or so. So I'm using historical data in order to try to predict the future, and I would sort of say, well, if the average overtime payment over the last 6 months was something like, I don't know, let's say it's $1,000 a month, then that's what I would factor in as my overtime cost. So that's pretty much labor. Like I said, it's quite straightforward. You may want to distinguish labor between indirect and direct as part of your cash forecast, but you don't have to. But for transparency, it may be a good thing. Now, overheads are everything else. We've looked at materials, we've looked at labor, so it's everything else. So we've got rent, we've got stationery, all the admin type related costs, and the only one out of them, insurances. Maybe you've got some insurances in there that you need to have, that need to be paid. So those sorts of things, vehicle expenses. And again, for a majority of them, I would use historical data in order to predict the future. So again, I would go back and look at what my, let's say, average monthly fuel costs are, if I'm looking at vehicle expenses for the last 6 months. And if it works out sort of $200 or whatever, pounds or whatever, euros a month, that's what I would predict for, and I would put it into my cash flow forecast. Mainly because, I mean, you don't exactly know, unless you know something that's coming up and you know that you're going to be doing a lot of traveling, then you can up that somewhat. But ultimately, that's what you normally end up doing. Same things for stationary costs and what have you. But then, when it comes down to things like insurances or rents or stuff like that, where you are paying normally, for rent, let's think about rent for a second. So normally for rent, you're either going to be paying If you're lucky, you're going to be paying monthly, right? So that's quite an easy calculation to make. But normally you'll end up paying something like about 3 months in advance or whatever, right? So even though, let's say, you'll keep it simple, your rental cost for your office is $12,000, pounds, euros a year, you'll normally end up paying that in, let's say if it's quarterly, you'll end up paying 4 batches of 3,000, right? So what you need to figure out or factor into your cash forecast is not the monthly charge of 1,000, but when you actually pay, you actually physically pay the amount to your landlord. So that could be, I don't know, beginning of January, then the beginning of April, right? Then the beginning of July and so on. So that's what you would put into your cash flow forecast. You wouldn't sort of divide the total by 12 and spread it out over the months, because that's what you do with a profit and loss if you're producing a profit and loss account, because it's under accrual accounting. But when you're looking at cash, you've got to keep in mind it relates to the date in which your cash is spent, or you spend your expense, the actual cash leaving your bank account, and that's what you're factoring into a cash flow forecast, right? The other thing is the same for insurances. Normally, even though you've got an insurance policy that may last you a year, what you do is you factor in the date in which you make the payment. So if you're making the payment, you're doing a forecast that includes the month in which you're making the payment, then what you end up doing is making sure that you factor that cash disbursement in the right month. You don't do it on a monthly basis, because that's, again, it's accrual accounting and not cash accounting. So when you're doing these things, when you're putting your overhead costs in, you've got to take into account when the cash is going to leave your bank account, because we're doing a cash flow forecast, right? So I hope that makes sense. Any questions, you can always send me a message in a comment. You can always send me a message to my email, which I will put in the description below. And like always, if it's something, this is something you want to look at further with regard to understanding cash flow forecasting and cash management in more detail, and like I said, I do have a course. It's the link is in the description below, and just click on the link. It tells you more about the course, and then there's an opportunity to make an appointment for a 30-minute discussion with me. We'll talk about your business, and we'll talk about what's in the course, see whether it's right for you. And like I said, as part of that course, we do have a weekly group session where you're able to ask me questions and learn from others in the group, so we get as an overall learning experience and how to improve our cash management. Or alternatively, I do have an ebook, Mastering Cash Flow, 7 Essential Strategies for Startups and SME Business Owners. And in that ebook, it's a pay what you can. It's, you can pay 50 cents or $1, 50p or whatever. And it goes through the 7 strategies that you can implement immediately, and that will improve your cash forecast. Whoop, I just hit my head. So that's it for today. That's part 5. Tomorrow we'll talk about bringing it all together and the reasons for bringing it all together. And we'll also talk about, because I got asked the question by somebody I was working directly with, where do you get this data from? We talk about, getting the cash the material cost data and whatever for the future periods. Where'd you get that data from, and how do you generate that data? So we'll have a quick chat about that, and that should wrap up the whole series, I think, unless there's anything I've forgotten. So that's it. Have a good day. I hope you're getting some benefit. I hope this information is useful. If anybody's watching it, I don't know if anybody's watching it, but if you are, I hope it's useful. And yeah, see you tomorrow. Okay, bye.